Good morning. Happy Friday, the 4th of September. I'm Jessica Amir, market analyst with Bell Direct. Well, just a day after the benchmark S&P 500 and the tech-heavy Nasdaq hit brand new record highs, US equities took a turn and tumbled overnight, seeing their biggest drop in months as investors locked in tech profits. Despite the better-than-expected economic news that came through, with jobless claims falling more than expected, investors took the opportunity to cash in on stocks that have been driving the market higher over the past 5 months. Now, this saw Apple shares fall about 8%, Amazon, Netflix and Facebook all lost about 4% each. As a result, the S&P 500's tech sector fell 5.8%, ending its 10-day rally, dragging the entire market lower. The S&P 500 fell 3.5%, its biggest one-day drop since March, while the Dow lost 2.8%, and the Nasdaq was down the most out of the major three indices, down 5%. Now, despite the doom and gloom, there were pockets of green, particularly in those beaten-down stocks tied to the economic reopening, with their stocks continuing to rally from yesterday, with the likes of cruise operator Carnival up about 5% and Macy's rising nearly 8%. On the commodities front, a bit of muted news there. The gold price lost a touch of shine and trades at $1,938 an ounce, easing on the back of a drop in jobless claims and that positive manufacturing data that came through earlier in the week. Meantime, the oil price moved slightly lower after losing 3% in the prior session and trades at about 41.37 US. The Australian dollar, meantime, has lost about 1%. It's now back at 72.79 US, as the US dollar has held strong on its territory, held strong in its upbeat ground on the back of economic news. Now, what to watch today? Well, it'll be a day of red for the Aussie share market, which is bracing for a fall of about 2% if you go by the futures, or 1.95%, which will wipe out this week's gain. Also keep an eye on US futures that have calmed down a bit. Earlier, they were indicating heavy selling would continue in the US this evening, but now the futures are not as dark. Also this evening in the US, of note, the monthly payroll data is out for August, which will be closely watched and is expected to show an uptick in jobs. As for three trading ideas, well, firstly, Life 360 is their code, was reiterated as the top Bell Potter buy stock overnight, increasing its target to $7, and that implies over 60% share price growth from yesterday's close. The family tracking and safety app Life 360 is the broker's top pick, as its first half results confirmed its new membership offering has received significant early traction, gaining over 40,000 new or upgrades in subscribers. As a result, its revenue is growing nicely ahead of estimates, so that's why 360 is a Bell Potter top buy. And in a big surprise, toll road operator Transurban TCL was upgraded by UBS from a hold to a buy with a 15.50 target. Given TCL's recent underperformance and the end is in sight for Melbourne's lockdown, UBS bumped up TCL to a buy. Now, TCL does have a strong pipeline of growth developments from 2022 to 2025, with projects ranging from the WestConnex in Sydney, the Westgate Tunnel in Melbourne, and a number of projects in Washington, which UBS says will grow its development pipeline by 13% per annum. Plus, UBS sees further upside in the widening of the M7 in Sydney. So that's TCL, a UBS buy. And Ready Tech RDY is showing a bullish flag chart pattern, according to Trading Central's data, which tells us the stock may rally from yesterday's close of 193 to 219 to 225 over 5 days. That's if you go by standard technical analysis principles. The online student management company recently handed down stronger than expected earnings and subscriber growth that will and truly beat market expectations. So check that out potentially. I'm Jessica Amir with Bell Direct. Happy trading and stay safe. I'll see you for the weekly wrap.